The very strong start to equities market shown over the first quarter of this year now appears to be well and truly frizzling. The fall of commodity prices over the last month or so, and also the European debt problems being back in the headlines, is really weighing on equities at present. Overnight, technology and consumer discretionary stocks showed a sharp decline, and this led the Nasdaq index down about 1.7% over Monday's trading. Overnight, the New Zealand dollar was very turbulent and traded as high as 78.70 against the US dollar. However, this morning it is back trading around 78.20. This week in New Zealand, we'll see the budget announcement on Thursday, and this will be a key event for our market this week. It'll be interesting to see what other big-ticket items are going to face expenditure cuts over the next year. The euro bounced off about 6 weeks' lows against the US dollar overnight as a little bit more clarity was realised about the Portugal problems. Overnight, European leaders agreed to a $78 billion bailout package for Portugal. This is the third country in the European zone to receive financial assistance after Greece and Ireland have already received financial assistance. The bailout package will come about 2/3 from European member countries, while the International Monetary Fund will contribute about 1/3 of the money. It is expected an aggressive plan of privatisation of Portugal's assets will be one of the conditions set in the $78 billion bailout package. Greece is also still struggling against huge mountains of debt currently, and they are expected to announce increased austerity measures over the next month or so. 2 more border dikes were opened on the Mississippi River to ease pressure on the levees. The farmland around the Mississippi River, and especially in the Delta area, comprises mainly corn. However, currently rice and also soybeans crops have been affected. Due to the fact that there is a large proportion of cotton there, it is important to see what pressures will remain on wool prices back here in New Zealand. Over the last 12 months, we have noticed that cotton prices move in close correlation to wool prices. However, at present, it is a little bit too early to tell if this will have upward pressure on wool prices over the next season. Also, with corn and soybean crops being affected, this will likely have a positive impact of the feed costs over in the States at present. We've already seen a little jump in the Chicago Mercantile Exchange. However, it is, as I said, too early to see if this will be a long-term trend or else just a short-term blip, as the flooding is only likely to last for the next month or so.